Good morning, traders. It's 9:02 a.m. Chicago time, Eastern time on Monday, the 25th of September, 2017. I've got to get used to just going with Eastern time to make this more universal. I keep referring back to Chicago where I am. Again, thanks for joining me this morning and happy Monday to you. Hopefully, you had a very restful weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market position right now is we have a little bit of risk off, not by much, about 0.2% on around 0.2% on most of the indices. The Nasdaq is off 28.5 points or 0.5%. The Nasdaq's actually trading below Friday's absolutely and completely balanced day. Tough trading on Friday. Crude oil is leading the pack at 51.20, battling the low volume node up here from way back in August, and is up 1%, followed by RBOB and the U.S. dollar. That's the market's disposition as it stands right now. The S&P 500 is trading at the low end of Friday's range. We've moved the point of control and moved the range lower for 3 days last week. From Wednesday's FOMC, we've crept a little bit lower and lower on tighter and tighter range. On Friday, also we saw the VIX dropped to 9.54%, 9.54%, the lowest it's been in a few months. And so it's pretty tight. It is a Monday, so not expecting anything crazy. As far as the week goes, today we have well, this week is seems like central bank parade week. If you look at the calendar, you'll find just an absolute ton of central bank speakers. We do have Yellen on Tuesday at the NABE at noon Eastern, and we have Draghi on Friday. Speaking on Friday, the key figures, the key figure of the week is the Chicago PMI, which is on Friday. But this is a very busy calendar week. Make sure you have a good calendar or news feed. Very useful on weeks like this. Other than that, not much to talk about. There's as far as what's going on. Let's take a quick switch now. Take a look at what we had anticipated for Friday. Friday, the expectation was for the market to be responsive, to push up back into the range. The expectation was to push into 2501 quarter and then start to go sideways and then sell off into the close. That's the main expectation on Friday. Secondary plan for Friday, the secondary trade, key trade for Friday, is if it becomes initiative, it'll likely be a slow initiative grind down and then find a base in the 2490 area to rotate back up. The target then becomes 2501. That would be an extended target on the upside. That would be 11 points, which is a fair amount these days. Here's what actually happened. What we had on Friday is Hypo 1 on the dot, basically, but incredibly slow. Incredibly slow. This is the normal resolution in which I view my Renko chart, my two-tick Renko chart, and this chart has almost 3 days on it. That is how slow the movement has been. That's how tight the range has been. And so there's just not much to say here. What we saw is basically what we expected for the primary hypo, right? So we move in a grind up, but the main move is upwards towards the point of control, which is what we saw here. Very slow grind up with an impulse up to the point of control, pull back to the mid and VWAP almost exactly mid VWAP OS high, the opening swing high, which is this dashed line right here. And then it just closed. There was no selling on the close. There's a little bit of selling on the close as part of this move, but what we saw Friday is almost like the first hours of trading, the first 2 hours of trading taking all day. I'm not going to continue to bitch and moan about it. It just is what it is. But you know, the market is in a situation where we've been running for about 8 years, and there are a lot of concerns, geopolitical mostly, you know, a nuclear tug of war going on between North Korea and the U.S. Among other things, a lot of talk of cracks in the foundation of the stock market and things like that. But we've been running for a long time, and so it makes sense that the market's just completely sideways here because there's enough going on to keep this near highs as it's been. And then there's enough here to, because it's run up so much. There's enough here for people to be cautious about continuously being staunch bulls. Although on drops, you buy the dip, but to here holding steady for a few days, there's not much to go with here. So this really is a time to just relax and really maybe find something else to do for a good portion of the day. Looking at the profile, the composite profile over the last week. So from Monday we gapped up, we tested the prior range, and we held high on Tuesday. Then Wednesday we had the FOMC. Drop us down and test 24.94, the MC point of control, as we talked about last week. And then Thursday was just an inside day, and then Friday was a day that opened just outside open auction, out of range, that came back into the range, giving us this profile that is just very, very fat, unhealthy looking profile. And that's where we are. We've got a lot above us. We've got a lot of volume above us. We have a multi-pronged profile. We have the MC point of control right there. We have another high volume node in the middle, and then we have a high volume node at the bottom. We're up against that high volume node. There was a quick drop here this morning, and I've searched for what the story is. Let's close this. I'm not going to be able to go over the RTY today, but the market has dropped a little bit this morning. If I look at the overnight or the 24-hour session on the NQ, I'll show you. Pretty fast drop here at 7 o'clock. Just not seeing too much in the way of news that relates to this NASDAQ drop yet. But there's been a fast drop in the NASDAQ that's helping drag a few of the other products down in sympathy. But overall, the S&P pushed higher near all-time highs and has been trading sideways to down below the point of control, below the open, looking weak this morning. So that's how things are shaping up right now. So not too much to glean other than the fact that the market tested up. So the thing to walk away with from the overnight session, we tested up. We had a bit of an excess here, and the market's shifting down and is holding lows. The low is very weak. The expectation is the market is likely to become initiative into the open. So we'll see how that goes. Now, while we're here, I like to review on Mondays. I'd like to review what we accomplished last week and how things are shaping up. So since we're trading right now at 24.95, so right here, right now, right at the low end of the range, unless the market pushes up and through 25.02 or so, I'm going to be looking short this morning. Short. even for the week, and your targets are the prior point of control, the gap beneath at 2408 or so, and so on. And we're likely to end the one-time framing up this morning on the weekly. So if I zoom out here a little bit more, okay, so you can see here we bottomed out on the 21st of August, and we've been one-time framing up, meaning putting in lower or higher or equal lows, higher or equal lows. We don't care about the highs. Higher or equal lows gives us one-time framing up, and we've been one-time framing up for 6 weeks now, and that is coming to an end, and it's likely to increase volatility, and it's likely to give us an opportunity to trade down into the gap zone. That's like I mentioned at 2488 or so, and repair some of this, auction this some of this properly. So mark my words here, I'm expecting this week to give us a little more opportunity than it did last week, especially with the parade of central bankers and who knows what's going on with this North Korea thing. So that's how things are shaping up right now for this product. As far as what we're expecting today I'm looking for an open auction in range. I'm looking for it to push higher into the 24.97 quarter area, 97.50, and I'm looking for a rotation down. I'm looking for it to take out the 24.94 that we left behind from the FOMC to test that MC point of control, get tangled up here a little bit, push lower, and then put in a lower low, and then end higher on the close. So end with a run up on the close. That's hypo 1. This is a higher probability play. Like I said, I'm looking for 2502 to be the dividing line up here to change my mind on holding steady on the short side. I'm not going to overstay the shorts. The shorts are tough to hold on to in this product. But overall, I'm looking for initiative trading against Friday, responsive trading against the lower micro composite. So that means I expect us to move away from the most recent auction range. Okay. The secondary play is an open auction that drops, and then we look for an impulse up, looking for strong buyers to step in as we get a dip, and then a pullback into the open, and then continuation higher. And so hypo 2 is looking for us to come back into the range, and we start to test the middle high volume node, which is at 2502. And so we're likely to go sideways into the afternoon and drift up to 2502 and finish somewhere inside of Friday's range. That is the second hypothesis. Okay. The third hypothesis is trend down. So open, 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 test, drive, and then consolidate, and looking for to come back into the close. That's hypo 3. Okay. Hypo 4 is looking for the opposite. It's looking for open test drive going up, and then 5, I'll let you come up with your own hypo 5. But that's what I'm doing this morning. I'm going to sit, wait, watch, wait for the market to say, here's what we're doing. Here's who's participating. It's short-term traders, or here's a high time frame trader coming in with some volume, and they're pushing in a direction, buy, sell, and then my job is to pick a spot, to find a spot where I can go with that high time frame trader while defining my risk. That's my job. That's my job as a trader, is not to guess at where the market's going, but to guess at what could happen so that I can be prepared to take action if and when it does. And it's most important to define what your key areas that you're leaning against. In other words, what do I mean by leaning against? I mean, look for an area where, look for a trade, let's say short. How far does the market have to push to the buy side to make your trade wrong? and how difficult would it be for it to push in that direction. This is what we're after. This is why we want to make the market work hard to get our stop. We don't want to put our stop in such a position that just a minor rotation in any direction takes us out of a 4-tick stop. We want to take a position where the market has to really work hard the other side of a point of control, above mid, things like that, where the market has to clearly reject our idea in order to take us out. Okay? Otherwise, you're just giving money away. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.